Good morning, ladies and gentlemen. My name is Vasil Dikov, and I am a Senior Account Manager with GDMFX. We will start with the North American markets from the US and Canada. The ADP employment change came out in 10,000, better than expected at 205,000. Market PMI composite 0.5 less than previous. Market services PMI 0.5 worse than expected. The ISM non-manufacturing PMI was 1.6 worse than expected. The Dow was 20 points up, Nasdaq sideways, the Dixie down to 97.41 from 98.79. The US dollar versus the Canadian 270 pips down, USD Swiss franc 135 pips down, USD Japanese yen 165 pips down. Today we're waiting for initial jobless claims and factory orders month on month. And tomorrow all eyes will be on the NFP and unemployment rate for the US and unemployment rate and net change in employment in Canada. Moving on to the EU markets. The EU market services PMI came out as expected at 53.6 points. Services PMI were worse than expected in Germany, France, Spain and Italy. EU retail sales year-on-year was 0.1% worse than expected at 1.4%, and the month-on-month EU retail sales was 0.3 as expected. The DAX 30 was 20 points up, the CAC 40 was 10 points up as well. The euro gained 180 pips versus the US dollar and lost 60 pips versus the Canadian dollar. Today we're waiting for a speech from Mario Draghi focusing on the non-monetary policy statement from the ECB and the European Central Bank Economic Bulletin. Moving on to the UK. The pound had its 3-week high peak yesterday, gaining 1% against the dollar, which was the second highest run this year. Sterling touched $1.46, a level last seen on January the 11th. With disappointing data from the US and better than expected services data, investors may speculate that the overall pessimism towards the UK economy is unjustified. Today we will be focusing on the Bank of England minutes and the inflation report for clarity on how Mark Carney and his team are evaluating the inflation risks and inflation projections, which may need to be reconsidered in the light of the slump in oil prices and the Chinese economic cool down. Yesterday we had the market services PMI in the UK, which came out with 0.3 points positive at 55.6 points. The FTSE 100 gained 19 points and closed at 5,895. The pound gained 178 pips versus the US dollar, 130 pips was down against the Australian dollar, and it lost 155 pips versus the Canadian dollar. Today we're going to have the Super Thursday, which includes the interest rate decision and an asset purchasing facility from the Bank of England, the interest rate vote, the quarterly inflation report, the Bank of England minutes, and a press conference from Mark Carney half an hour later. Moving on to Asia, the Japanese foreign bond investment was minus 85.4 billion yen, and the Japanese foreign investments in Japanese stocks was minus 3,600 billion from the previous at 190 billion yen. The Nikkei 225 was 430 points down, and the US dollar dropped with 168 pips versus the Japanese yen. In the Pacifics, traders are increasingly betting that the Royal Bank of Australia will resume cutting interest rates in the next 6 months. The probability of a 1/4 percentage point reduction in the 2% benchmark within the coming 6 months was at 96% as of this morning in Sydney. Policymakers will update their forecast for growth and inflation tomorrow, after highlighting in the rate decision from this week that recent market turmoil may be a trigger for additional easing if it dents global and domestic demand. The RBA Governor Glenn Stevens and his board are weighing signs of strengthening labor market and within target core inflation, but the threat is both will be derailed by crashing equity and commodity markets. The NAB business confidence came out at 4 points yesterday, up from the previous reading of 1 point. The Australian dollar gained 130 pips versus the US dollar. The Kiwi gained 140 pips against the US dollar. And today we'll have performance of construction index for Australia. And on Friday we'll be waiting for the RBA monetary policy report and retail sales from Australia. And finally, on the commodities front, crude oil stock exchange inventories increased by 7.8 million barrels in the week ended on January the 29th. Gold futures rose to the highest level since November in North America, trade on Wednesday, after data showed that services sector activity in the US grew at the slowest pace in almost 2 years in January, dampening optimism over the health of the economy and dimming the case for higher interest rate this year. Gold had a range of $21 trading at $1,141. Silver had a range of 53 cents at $14.64 now. The crude oil had a $2.40 range at $32.61 right now. And natural gas is trading at $2.02 at the moment with a range of 9 cents. Today we'll have the natural gas storage change report, which could show a withdrawal of approximately 170 billion British thermal units for the week ending on January the 29th. On Friday, Baker Hughes US oil rig count. Thank you and have a nice day.